Good evening. The official cash rate has been sliced to a new historic low of 2%. The Reserve Bank blaming ongoing economic weakness for the decision.
SBS Finance editor Ricardo Goncalves joins us now with the details. Ricardo, it might be a sign of a slowing economy, but borrowers won't be complaining.
That's right, Janice, especially those with a mortgage. Today's 1/4% cut will mean those with a $300,000 mortgage will save about $40 every month on their repayments. And ANZ is the first of the big banks to commit passing on the cut in full from Friday. And late today, the Commonwealth Bank said it's reducing its standard variable rate by only 20 basis points from next Wednesday, but is increasing some of its savings rates. With a goal tied to match a golden smile 1 week before the federal budget, the Treasurer is calling on Australia to go on an investment splurge.
Now is the time to borrow and invest.
It's a sales pitch to stimulate an economy being held back by a stubbornly strong Australian dollar.
Today, the Reserve Bank is trying to do the job that Joe Hockey won't.
The Reserve Bank's decision means the official cash rate is at an historic low of 2%.
Australian interest rates are well out of whack with interest rates around the world, and this was a necessary adjustment.
Downward adjustments, which have been happening since 2011, saving mortgage holders about $110 a week since then.
Good news for families, good news for small businesses.
Sydney cafe owner Paulo Gatto is expecting more trade.
A young family, they're trying to go out at least once, twice more a week.
Already profitable banks could see further activity as borrowers access cheap credit. Today, ANZ posted a $3.7 billion half-year cash profit, up 5%.
We're seeing really near record high home loan approvals, which is fantastic.
There are concerns today's cut could fuel the property market, especially in Sydney, where prices have surged nearly 15% over the last 12 months.
If we see the recent trends in Sydney continue for another year or so, then certainly you're going to have some severe overvaluation issues.
Savers will be hit. Bank deposit rates are falling to levels not seen since the mid-1950s. Ultimately, the Reserve Bank took advantage of a steady inflationary outlook to try to support demand. It means business owners can focus on other pressing issues like retaining employees.
In terms of professional staff as a waiter, waitress or cook or pastry chef, in hospitality in general, we struggle in Australia because there is a lot of restaurants.
And ANZ's Warren Hogan did tell me he thinks the probability of another rate cut, Anton and Janice, is quite low.
Okay, thanks for that update, Ricardo.